Hello, this is Sizwe podcast. My name is Agnes, and if you are joining us today we are talking about a very important topic in this season that we are here in Canada. If you are an immigrant, you know that tax season is this season, and I am privileged to bring into our studios a very guru member of filing taxes. His name is Dallas Gumbo. If you have not met him, he is here, and if you don't know where to file your tax, come to see me after this and I will tell you. Dallas, you are welcome.
Thank you very much, Madam Agnes. I'm happy to be here.
Thank you so much. We are honored that you have time for us. So Dallas is somebody who you can consult, and if you need help with taxes, he's a compliance agent, officer, give him all the big names around taxes. But today, we know we have different forms of taxes. But as immigrants, wherever I came from, there was nothing like filing our tax. But when I came here, I heard of that. A lot of us, every year immigrants come. So it is a topic that never grows old. So I'm putting it back to Dallas. What is this whole idea of filing taxes when we come to Canada?
Thank you. So filing taxes in Canada is a statutory requirement for just about every Canadian citizen, permanent resident, as long as you are on the land. If you work or you didn't work, you still have to file your taxes. It gets to be easy for the government to tell what kind of assistance you need, what kind of social supports, credits you'll be entitled to, only after you've filed your taxes.
So you said something, whether you work or you didn't work, so far as you are here on the land, you hold a certain form of permit. You can be on temporary work permit, you can be a permanent resident, you can be a citizen. You have to file your tax, whether you worked or you didn't.
Certainly, whether you worked or you didn't, you still have to file your taxes.
I didn't know that.
If you live in Canada for 60 years and you are of age of majority, you are age of consent, you are supposed to file your taxes for every year you live here as an adult.
Very good. Guys, if you just join us, this is Sizwe podcast. Like I said, we are in the tax season, and I have with me Dallas Gumbo. He's a tax consultant, and all messages around taxes, individual taxes, business, corporate. But today, I think we narrow it to ourselves as individuals, and I have a lot of loaded questions for him. So Dallas, what do we take to you when we are coming to file our tax?
Okay, normally, under normal circumstances, if you happen to have worked the previous year, or if you had some social benefits from the province, from the federal government, they will give you some T documents that you bring over to anyone who gets to be filing your taxes. Or you could be doing it yourself if you've got the knowledge. Employers will give you T4s. Banks, if you've got interest and through banks, will give you T5s. The provinces, the federal, if you get social assistance, they'll give you T5007s.
And then if you are a student,
there will be documents that you get for paying tuition, your T2202A documents. And if you happen to have received some grants of sorts from the federal government, the provinces, or anywhere else, you get T4As that you'll need to bring over for filing taxes.
So thank you, Dallas. There are some of us who are parents who have children. Is there any other documentation that we have to bring along when we are coming with our T4s and our TTTTs?
It depends. As parents, if you happen to be paying for daycare, that's one other credit that's still available for us to claim when we're doing our taxes. If you've got kids that are under 18 and some of them are actually going to daycare, you can actually bring the daycare receipts to be able to help reduce your taxable income.
Okay, I think that is the part I'm inching towards. But there are some documentation that sometimes we get told, if you do this, you will get a tax return. but before I go to that, I need to ask this question about how much taxes do you have to pay to be able to get an income? Because I am an African, so we talk. And sometimes some people go to file their tax and they make a lot of money, and some people go to file their tax and they are paying back. What is this idea of some people are getting money and some people are paying back to the government?
It really depends on how you. There's forms that you get when you start employment.
Yes,
with
employers.
And there's this one particular one. It's a TD1 form. One of the forms will be TD1 Alberta for us in Alberta, or TD1 Ontario, that kind of a thing. Yeah. Or the other ones will be federal. So for the federal ones, in 2023 at least, the basic minimum that you had to be putting on there, the basic amount you could claim was $15,000. And
what does that mean?
So essentially that amount means you are actually somewhat tax exempt for any income that's from 0 to 15,000 as a Canadian.
That's a Canadian.
So that's a threshold. That's a basic minimum.
So that thing changes every year, right?
It changes
because sometimes it is 13,000.
Yes.
Oh, okay. Because
so every year it goes up as the government tries to compensate for inflation and those kind of things.
Okay.
Yes.
Okay.
Certainly.
Yeah. So if you get that document, and like if you get a job, your employer just give you those forms and they ask you to sign. Yes. But honestly, nobody has explained those two forms.
Yes.
That one is federal, one is this. So we are saying that if it is 15,000, the amount that you get from 0 to 15 is not taxable.
It's not supposed
but your
to be
employer will tax you.
Yes.
And that is when, if at the end of the year you go and file, you get those amounts back.
The legal amounts, but for the most part, with the kind of taxation systems that we follow now, and even the payroll systems that employers use, they do compensate for that basic amount as you are being paid during the course of the year. So under normal circumstances, a properly functioning system, after the employer has paid you $37,000 in a year, within that, there will be that particular
minimum
facilitation in there that says you did not pay taxes for the first $15,000.
Oh,
so
okay.
Under normal circumstances, when you paid your taxes well during the course of the year, when you do your taxes, you should owe nothing to the government, and the government should owe you nothing back. But because there's some of these other things that happen, circumstances that come into our lives during the course of the year, that the employer doesn't know when they are taxing you. And we factor them in when you are doing your taxes.
Yes.
Then you get a refund back.
Okay.
If you have one job. But if you have two jobs, then another phenomenon comes into play. Because for the first time, the two employers get to come together.
In front of the person who is filing your tax for you. Yes.
And at that point in time, we get to determine that, hey, while you were doing your taxes, while you're getting paid during the course of the year, you did not pay enough taxes because possibly you signed the same TD1 document the same way for all the people that have been paying you. And they were all paying you under the premise that this is your only income.
Yes, the minimum income. Guys, if you just join us, this is Sizwe Podcast. And I want to draw Dallas back to the question again. Like he's saying something that really affects some of us and most of us. You have one job, you go file your tax, you get a tax return. And then the next year you have two jobs and you are going to file your tax, and all they tell you you own you owe something to pay back to the government. And sometimes it's confusing. So what he's saying that when I get a second job, the same two forms that my employer gives to me to sign is what causes that trouble, and they don't explain to you, or maybe your employer don't ask you, do you have another job? So that you will start paying your taxes. You don't have any base again.
Yes.
In your second job, you don't have any base again. You have to start paying your tax right from zero up.
Very true. Certainly.
If you just join us, this is Sizwe Podcast. And if you do that, I don't think you are going to be in trouble where the first year you got a huge sum of tax return and you are happy and you are jumping. And the second year that you got a second job, you go home with a long face. It has happened to me.
Very true. Very, very true indeed.
So Dallas, I want to bring you back to a question that I put, and I wanted to put a hold on it. There are certain things that we can add to our T4s or some claims that we can make. There's this popular in our African community, and I'm saying because I am in that community, where we bring tax receipts from our churches. And sometimes some people get into arguments with the accountant because that is what the church told me, and you are saying that it is not. I cannot factor this in. What is happening over there?
With that particular instance, it is actually a tax credit benefit we can utilize. But what is very important is to make sure that whoever issues that receipt to you, the church denomination that gives that to you, they need to be registered as a charitable entity.
So there are two registrations. I work with a nonprofit. Even for us, we have two. We have the societal registration,
Yes.
and you can. A lot of churches have that, and they can still operate as churches.
Yes.
But that is not what you are talking about. The church has to have a charitable. Very good. A charitable status.
Yes, and the charitable status would help because it helps CRI to be able to authenticate the fact that whoever gave you the receipt is actually entitled to that particular level of jurisdiction to give you those. And I've seen it in certain instances where people have filed their taxes and claimed that, oh, my church actually gave me a receipt. And then on the flip side, CRI goes in to investigate and they come around saying, hey, you know, the receipt you gave us, the receipt you used filing your taxes was issued by an entity that does not have the authority to give you a refund based on a donation.
Awesome. Guys, if you just join us, we are in the tax season. My name is Agnes. I'm here talking to a tax consultant. His name is Dallas Gumbo. And I'm asking him all the questions that will not land us into trouble when we are going to file our tax, or we filed our tax, we got the money, and later the government comes after us. Yes. And one of the things is, if you get a tax receipt from your church, you have to find out if the church has a charitable status. And that one, you can ask your pastor. Don't be ashamed of it until you get yourself into trouble. Dallas, during the COVID, I found myself into some sort of trouble, and I will explain. So there was this sale of cooking pots that were going around that if you buy those cooking pots, and they were very expensive. If you buy them and you show people how to use the cooking pots by cooking in it and telling them that you don't need to add water. If you cover it with this kind of lid, the vegetable will cook and all those. It was fancy. And they told us that you can use that receipt for filing your tax. How true is that?
Actually, thank you for that question, Madam Agnes, because what actually happens with those, anything that comes to you in the form of, if it feels or sounds
too good.
There's something definitely amiss with it. And with the way CRI works, and from time to time they do issue some directives out there that there's tax schemes that people come up with to try and convince you and make you believe that you get a bigger refund back.
Yes,
But they are schemes, and there's no truth to them. So, and you just have to make absolutely sure that whatever anyone is telling you that you're going to need to deduct on your taxes is allowable. Because that particular scheme you are raising is one where you're told that now you're going to operate like a business. And as you operate like a business, you're going to use the expenses on the ports and everything to reduce your taxable income.
Yes, yeah.
And when you do that, it might seem to work the first month or so because nobody has looked at your file closely. When they look at your file closely, then you come back owing taxes. Yes. So those are the things to look out for.
Wow, thank you so much. Guys, if you just join us, this is Sizwe Podcast, and you can bring in your questions. Luckily, if we have enough questions to put us back into this room, we will bring Dallas back to answer the questions. From now up to the end of the year, you are open to file your tax, and that's what Dallas said. I thought so, but sometimes you get, is it a notification or people say that you have only up to April to file your tax? How true is that one too?
So the tax filing timetable actually says April 30th. Occasionally, CRI will say, okay, we'll give you an extra
grace
day
period,
or two
yes.
and things like that. But what that really means is this is the time you can file your taxes and not be penalized if you happen to owe taxes back to the government. So if you file and you owe $1,000 back to the government and you file by April 30th, there is no penalty.
There's no penalty.
If you file by May 7 and you owe $1,000, there will be a penalty.
Okay, they are going to begin to calculate increases
Very
and
true.
interest on that. That's
yes.
so. But if you know that, then how would you even know if you don't go to file your tax to know whether you owe the government or you don't, or maybe you are getting me? I file it because I think I'm going to get some money back, and sometimes I get disappointed. Anyways, guys, if you just join us, there is a question that we don't normally think about it. That tax filing is also a means of savings.
Yes,
saving some money. Can you explain that to us?
Actually, I know it would sound like that in tax filing and saving money, but in reality, it depends on how much. If you've been paying more into your taxes during the course of the year, this is where you go to your employer and say, hey, take an extra $75 every paycheck. And you know certainly that at the end of the year when you do your taxes, you are going to get some money back.
Yes,
if you get it lump sum, then you can do whatever. I know it's a way of saving, but I would rather... also, people consider things like RRSP.
Yes,
stuff like
yeah.
that.
So, what are those? How do you save on those things?
So, RRSPs, if you like this time of year, up until the end of February, actually, you can actually continue to buy RRSPs. Go to your bank and say, "Oh, I need to purchase maybe $5,000 worth of RSP."
And every year you get that kind of form that tells you how much allowable money you can use. So if you have received that, you know how much money of RSP you can buy at the beginning of the year. And that one too has a timeline, right?
There is the timeline is going up to March 1st thereabouts.
Oh, okay.
Every year, because the RRSP cycle begins at the beginning of March and goes to the end of February the following year. So that's where and essentially the RSP just helps to reduce your taxable income. If you pay taxes at this level and you are not supposed to be getting any refund whatsoever, and all of a sudden you reduce your taxable income, you get something back.
Get something back. Yeah, and for me as an African, filing tax is all about getting some money back. Yeah. So there are some arguments also, or some beliefs in our community that says that if we are husband and wife, if we file our tax separately, that makes us get some money back. How true is that one too?
Actually, there is really no truth in that. If you are husband and wife, and the parameter says you are married.
Yes, it says that.
If you are married, your income has to be disclosed on husband's income, or husband's income has to be disclosed. Because there's certain benefits that are calculated based on family income. For as long as you have family, we're going to need to know
how much your husband made and how much your wife made.
To calculate child benefits. GST credits and, some of those other elements. And in Alberta right now, and a few other provinces, we also have carbon tax credits that we get. So it's easy to get all of those calculated correctly when people do their taxes together if they are married. If you are separated, if you are single, fine. You can go different space.
So that's just a myth.
It is certainly a myth. It is a myth. I've come across arguments where people get to say, no, we want them to be separate. Even as we're filing, we keep them separate, but we optimize them
as a family.
As a family, and then, but on sending them off to CRA, the filing process itself files them SIN number specific. Social insurance number specific. So they are separated at that level. But for optimizations, we combine them.
Thank you so much, guys. If you just join us, we are bringing the curtains to a close. We talk about taxes, what you do, what can make you not owe the government. Because for me, if I'm working to an accountant office or somebody who is filing my tax, I don't plan to come out with a long face. And I want to ask Dallas, this is a tax year. What else haven't I asked? And what do you want to add for our audience so that this year they will go out of your office smiling?
Okay. No, certainly. And I think it'll be good for people to utilize this window to look at their tax files before we get to lose deadlines on the RRSP season and stuff like that. And also, it's a good thing to do. Doing your taxes helps the government to understand your needs as well. Some of the things because if you don't file, you do not get your GST and eligible for that. You do not get your carbon taxes if you are supposed to be getting that. Even child benefits. I've got people who come to me 2-3 years later.
Before.
And then they get to discover that, oh, you know what? The government has been owing us in excess of $10,000-$15,000.
Because they haven't been filing their tax.
Because they haven't been filing their
taxes.
So it is, it's an outstanding sign of citizenry.
Awesome.
As a perfect citizen, let's do our taxes.
File your tax.
Yes.
And thank you so much, Dallas, for joining us. And you said if you want to be a citizen, but I think for us as immigrants, it's high thing for us. If you come here even as a student, you want to stay.
Yes.
You want to apply for your open work permit, your PR, and all of these hinges on tax filing.
Yes.
If you have more questions, please don't hesitate to add it to this video, and we will sure bring Dallas back from now up to April to answer more questions. Thank you so much, Dallas.
Thank you so much, Madam Agnes. Wonderful.